Joining me now is Matthew Tuttle, CEO and CIO at Tuttle Capital Management. Matthew, not your first time in the show, but your first time in person, so welcome to the desk.
Yeah, thank you very much for having me.
All right, so let's get right into it. You say July 29th could mark the situational awareness low for AI stocks. Explain what makes you so confident.
Yeah, so the AI stocks the past couple of weeks sold off hard. And a lot of times when you want to stem a sell-off like this, someone's got to get carried on a stretcher. And unfortunately, it was Leopold. And since that's happened, since Ken Griffin bought his portfolio, we've seen a massive snapback rally in all of these stocks. You want to watch the lows. If those lows get violated again, we're back to sell-off. But as long as we stay above that level and things look like they're in an uptrend, I'd be a buyer. It looks like, at least for now, the low's in.
Okay, so keep an eye on the lows. If you're right, what happens to tech stocks from here?
So tech stocks go back into rally mode. Now, we're going to have corrections. We're going to have sell-offs. It's not, we're rallying for 4 straight months into the end of the year. There's going to be rocks along the way. But, I'd be a buyer here, and I'm definitely bullish. There's certain things we're watching, but if none of that stuff happens, we're bullish.
And you came with some picks, which we will get to, but first I want to ask you about SpaceX, because SpaceX is moving quite a bit lower today after earnings. You looked at that first earnings report, you heard what Elon Musk had to say. Are you more or less bullish on SpaceX after it?
So, I'm bullish on it. I don't know if I'm more or less. Everyone expected Elon was going to have a blowout. Better than expected, and he did. So we do a daily newsletter, and tomorrow's edition, unless something weird happens that interests me more, is the AI CapEx debate goes to space. So I think what happened is Elon is spending a bunch of money on CapEx, and a couple of months ago, that'd be great. Now people are looking at that and saying, well, where's the revenue? So I think they're getting hit based on that. But also remember, it was up 9.5% or so yesterday. So, I'm not seeing anything in here that surprises me. I'm not seeing anything that worries me. Certainly you've got, the unlock of insider shares. It could be volatile for the next week or so, but, long term, you don't get rich betting against Elon. We own it in 3 of our ETFs, SPCI, UFOD, and HALX. We're not buying more. We're not selling it either.
Okay, so you're a buyer of tech, but not a buyer of SpaceX on the dip. Show me the revenue story, it seems like you're saying. So who will be the beneficiaries of the show me the revenue story? What stocks would you be buying here?
So a couple of names we really like, and we're looking at picks and shovels in the AI trade. And again, like you said, who are going to be the beneficiaries, not the spenders? So one of the ones we like a lot is Cadence. So, they're at the forefront of a lot of what's going on with these chips. Them and Synopsys have pretty much a monopoly on something called EDA, which is what all these chips have to go through. Another one we really like is Broadcom. We love the bottleneck trade. Broadcom is there in a bunch of different bottlenecks. So that's another one we like. And then CLS. They're helping the data centers kind of build out all of what they're doing. So those are 3 of kind of our favorite pick and shovel names. We have 26 names we own in Mimi, which is our best idea ETF, and those are 3 that we have right now.
So you mentioned CLS, Celestica.
Yes.
Broadcom, of course, AVGO, Cadence, CDNS. You like the beneficiaries of the spending more than the spenders.
Definitely.
What does that mean for your call on the Mag 7 then? Because we know they're doing a lot of spending.
They're doing a lot of spending. I do think the Mag 7 is a must own, but I don't know that's where you get, a lot of alpha going forward for the rest of the year. I think what Wall Street is saying is, again, show me the revenue, and you've got winners and losers in there. Obviously Microsoft did what it did, Amazon did what it did, but then you had...
So which would you buy here, which would you avoid?
So Microsoft, I would definitely buy here. Google, I would buy here. Apple is interesting. Apple's the one that's not spending, and Apple is the one that, if they execute, they're positioned to really dominate a lot of what's going on with AI, because we've got our iPhone. They haven't done it yet. We don't own it. We don't own it directly, but that's one I'd keep an eye on. But Microsoft and Google would be my favorites.
Okay, let's broaden it out, because it's not just tech in focus. We have financials and industrials hitting all-time highs. Is this a broad bull market, or is this a bull market that's going to still be driven by AI?
So it's going to be driven by AI, but what this sell-off in AI showed us is it's not just AI. So the AI stocks were selling off, but the markets really weren't. So, and I think that's going to continue. I think we're in a broad-based rally, and I do think you've got to bullet the AI stocks with some of these other names, because also what this sell-off showed us, you have a portfolio of all AI stocks. That's a wild ride that probably most people can't stomach.
So give us some of those other names that should be in the non-tech part of our portfolio.
Yeah, so I love the idea of HALO, Heavy Asset Low Obsolescence, and we have an ETF for that, HALX. And the idea there, on a broad base, it's traditional value names that are not going to be made obsolete by AI. And so more specifically, it's energy, it's utilities, it's materials, it's industrials. Freeport-McMoRan is a great example of a name we love. Copper. AI is not going to put copper out of business, but data centers still need copper. EQT for natural gas powering data centers. Railroads are another area. Traditional value name. Railroads aren't going to be made obsolete by AI either.
Are there areas of the market right now, though, that are too crowded outside of tech? Because we have seen industrials, I think now behind energy and tech, is the third best performing sector year to date. So have some already seen the most of the gains at this point?
So, money's going to keep rotating around. Certainly you saw a lot of money in this tech sell-off move into those value areas. And now you're going to see a lot of that money come out of the value areas, go back into the tech stocks. I think that's why you need to own all of it. Mm-hmm. Watch your position sizing, barbell the AI names and in these halo names, and then you don't worry about it as much because money is moving from one area to the other. But that's how it works, especially with value. The value type names will move up, everyone will say, oh, value investing, and then it moves right back out.
Best value in the market right now?
Best value in the market right now, gold miners. So a name like Franco-Nevada, which we own in our PCPP ETF, that is a gold miner, but it's a royalty company. So they don't have to mine the gold, they don't have to spend all that money, they just make money off the royalties. Time to buy gold and gold miners is when nobody wants them. And gold was the hottest thing a few weeks back, now nobody cares. Now I'm interested.
So I was taking a look at your notes, and we have a lot of people come on still bullish in the market because of the earnings story. It seems like you're actually paying more attention to the bond market, though, than earnings. You say that that's the real story here. Explain what you mean, explain what levels you're looking at to keep you bullish, and what would start changing your mind.
So the Fed meeting was interesting. Warsh didn't do anything. We call it Waco, Warsh always chickens out. But the interesting thing was there were 3 dissenters. I don't think we've seen that in 10 years. So you've got a real divide in the Fed. But the real interesting thing is the bond vigilantes made interest rates go up. The 10-year, the 30-year, longer-term interest rates, which the Fed doesn't control. That's a vote of no confidence, basically, in the Fed. Hey, we don't think the Fed's going to be able to handle inflation. At the same time, you're seeing the potential of an unwind of the yen carry trade. Besant is trying to support the yen. The Japanese are trying to support the yen. And one thing the Japanese may need to do is sell treasuries in order to buy yen. So we are laser focused on interest rates. Watch the 10-year. 5% is kind of our line in the sand. I am bullish on the market until if we get to 5%. If we get over 5%, I would start to get a little bit more worried about holding stocks.
If we get a rate hike between now and year end, is the bull market over?
Not over because everyone is expecting it. What I would be concerned about is multiple rate hikes and a 2022 type of scenario, especially multiple rate hikes and inflation still going up. One of the areas on inflation we're watching is oil. So, we've won the war again for like the 50th time. Oil is coming down. I'd fade that. Like I said before, part of the halo trade are oil companies. I think you want to buy oil companies on the dip. But if we see the war come back, intensify, Strait of Hormuz is closed, oil prices going up, and Fed raising interest rates, it's not a great backdrop for stocks.
But here's the thing, the war hasn't actually gone anywhere, right? We haven't seen a resolution, so it doesn't need to come back. It's already here, right? So
well, but you've got everyone now saying, they're going to open up the strait. We've got a ceasefire.
I keep hearing that, but it seems like the market just keeps avoiding it, right? Or ignoring it.
The market's ignoring it. They're looking at this war as short term, and they're looking at AI as this long, 5, 10, 15, 20-year thing. And we'll see.
When do geopolitics actually become more bearish for this market?
Every time oil ticks back into the high 80s, low 90s and above, that's when geopolitics start to matter again.
Okay, so let's sum it up for the everyday retail investor that's tuning in, saying, oh shoot, did I miss the tech bottom? And I'm a bit nervous to put money to work with the market at all-time highs. What should their first moves be?
You should be invested, and it's not sexy, but watch your portfolio construction. So situational awareness taught us a lesson. You can be right, and he was right on what he was long. He was wrong being short software, and still get wiped out if your position sizing is off. So what we teach people is, look, you want to own these names. Don't worry as much about the valuations, but have it be a small or smaller part of your portfolio. Balance it out with the halo names, but then also add in things like gold, things like crypto, things like property and casualty stocks, which we use as a bond alternative, things like pre-merger SPACs, add in maybe some T-bills, do some things on tail risk, and then you can ride it out no matter what's going on because your portfolio is not nearly as volatile.
So if I have fresh money to put to work today, what's the first thing I buy? You gave a lot of options there.
So, and not to toot my own horn, we've got a fun PCP.
I should have said that's not one of your ETFs.
All right, so if it's not one of my ETFs, that's tough. I guess I would be looking for, some of these AI pick and shovel names that have had a drop and are now starting to come back. One of them, and I'm just trying to remember charts, is Vicor, VICR. That's a name that we actually just bought in our Mimi ETF yesterday. It undercut a key moving average, popped back up, and that's kind of an AI power name. They make some of the technology that powers the chips. Okay. So that'd be an interesting name to go into now.
All right, and funny enough, this was not an ETF spotlight, which we do have, but we did get many of these ETFs in there. We'll have to bring you back for an ETF spotlight. All right, I think this is a great time to pivot to our rapid fire round of this or that. You've played before. Quick questions, quick answers, no hedging.
Yep.
Are you ready?
Yep.
Overall market, higher or lower by year end?
Higher.
Tech or the rest of the market?
Tech.
AI rally, sustainable or running on fumes?
Sustainable.
Bigger risk, AI bubble or missing the AI trade?
AI bubble.
Bigger risk, overexposure to the Mag 7 or underexposure?
Overexposure.
Biggest AI winner from here, chips, networking, or software?
Chips.
Software name you'd buy here?
Software name I'd buy here is ServiceNow.
Moving to chips, NVIDIA before earnings, buy now or wait it out?
Buy now.
NVIDIA or Broadcom?
Broadcom.
Mag 7 you'd sell here?
Meta.
Sector that's not tech that you think is the best position to outperform this year?
Gold miners.
Highest conviction stock pick for the rest of 2026?
Cadence Design.
One word to describe the market for the rest of 2026?
Volatile.
Bigger risk to the Bigger risk to the rally, recession or inflation?
Inflation.
We'll leave it there. Matthew Tuttle, really appreciate it. Thanks so much for joining us.
Thanks for having me.
That's Matthew Tuttle, CEO and CIO at Tuttle Capital Management. If you enjoyed this Street Talk, check out our full interview with Paul Meeks. He outlines the best tech stocks to buy right now and has some different picks than Matthew.